Welcome back to the channel, and if you're new here, make sure to hit that subscribe button because today we're diving into one of the most explosive stories in the precious metals market. Silver is up a staggering 162% over the past year, currently trading around $78.79 per ounce as of February 15th, 2026. Now I know what you're thinking. Is this the opportunity of a lifetime, or are we staring down the barrel of a classic bull trap that's about to wipe out late investors? That's exactly what we're going to unpack today with the latest data, market analysis, and some surprising insights that most people aren't talking about. Let me start by painting the picture of where we are right now. Just a few weeks ago, on February 11th, silver touched $84.72 per ounce, up nearly 5% in a single day. That kind of movement in precious metals is absolutely wild. But here's where it gets really interesting. Despite trading around $78 today, silver is still roughly 30% below its late January peak, when it briefly spiked even higher before experiencing what some analysts are calling the biggest one-day decline since 1980. We're talking about a nearly 30% drop in a single trading session. That kind of volatility would make even the most seasoned crypto traders blush. So the question isn't just whether silver is a good buy right now, but whether we can even trust this market to behave rationally going forward. Now, before we get into the technical analysis and predictions, we need to understand the fundamental story driving this incredible run-up. The silver market is experiencing something that hasn't happened in most commodities. It's heading into its sixth consecutive year of supply deficit in 2026. Let me break down what that means in simple terms. The world is consuming more silver than it's producing, and that gap is projected to be around 67 million ounces this year. That's not a small number. When you have persistent deficits year after year, basic economics tells us that prices should rise, and that's exactly what we've been seeing. But it's not just about the deficit. Let's talk about where the demand is coming from, because this tells us a lot about whether this rally has legs or if it's just speculative froth. Physical investment in silver is forecast to rise by 20% in 2026, reaching a 3-year high of 227 million ounces. This is massive. What we're seeing is a fundamental shift in investor behavior. People are moving away from paper assets and into hard assets, and silver is one of the prime beneficiaries. When you look at the geopolitical landscape, with elevated tensions around the world, concerns about the Federal Reserve's independence, and persistent uncertainty surrounding U.S. policy, it makes perfect sense why investors are flooding into precious metals. Here's something that might surprise you. Industrial demand for silver is actually projected to decline by 2% in 2026, dropping to around 650 million ounces. That's a 4-year low. Now, you might be wondering, if industrial demand is falling, how can silver prices be up 162%? This is where it gets nuanced. The decline in industrial use is primarily coming from the photovoltaic sector, the solar panel industry. Manufacturers have been working on what's called thrifting, which basically means they're finding ways to use less silver in each solar panel, and in some cases, they're substituting silver with other materials. When silver was trading at $20 or $30 an ounce, nobody cared about optimizing silver usage. But at $78 per ounce, every gram counts, and companies are scrambling to reduce their dependence on it. So we have this interesting dynamic where investment demand is surging while industrial demand is softening. Which force wins? Well, so far, investment demand is clearly in the driver's seat. But this creates a vulnerability that we'll come back to in a moment. There's another piece of the demand puzzle that's worth mentioning. Jewelry demand is projected to fall for the second consecutive year, declining by over 9% in 2026. Again, this makes intuitive sense. When silver was cheap, jewelry manufacturers could work with it profitably. But at nearly $80 an ounce, many consumers are either priced out or choosing alternatives. This isn't necessarily bearish for silver, but it does mean that the price rally is being driven almost entirely by investment demand and the structural supply deficit, not by broad-based demand across all sectors. Now let's talk about that crazy volatility we saw in late January. The nearly 30% single-day crash wasn't random. What happened was that the Chicago Mercantile Exchange, the CME, increased margin requirements for silver futures contracts. Margin requirements are essentially the amount of money you need to put down to control a futures contract. When exchanges increase these requirements, it forces traders who are using leverage to either put up more cash or close their positions. What we saw was a cascade of forced selling as leveraged speculators got flushed out of the market. This is actually a classic pattern in commodity bull markets. Prices rise, speculation increases, exchanges step in to cool things down, and you get a violent but temporary correction. The question is whether that correction is over or if we're going to see more volatility ahead. Based on the current data, I'd say we're not out of the woods yet. The market is still digesting that massive move, and we're seeing choppy price action as a result. Silver has recovered somewhat from the January lows, but it's trading well below those euphoric highs. This creates both opportunity and risk depending on your perspective and time horizon. Let me share something that professional analysts are saying. UBS, one of the major investment banks, has put out a forecast that's getting a lot of attention. They're predicting that spot silver will return to the $100 threshold by next month, March 2026. But here's the twist. They also expect it to fall back to around $85 by the end of the year. What this tells us is that even the bulls on silver are expecting significant volatility and a potential giveback of gains as we move through the year. Their reasoning is that while the fundamentals remain supportive at $100 per ounce, you're going to see even more industrial demand destruction, more substitution in manufacturing, and potentially some profit taking from investors who got in early. So where does this leave us? Is silver at $78 a buying opportunity or a bull trap? Here's my analysis, and I want to give you both sides of this argument because I think it's important to make informed decisions rather than getting caught up in the hype. The bullish case is actually quite compelling. You have a market that's been in deficit for 6 consecutive years. That's not a short-term imbalance, that's a structural issue. Mine supply can't keep up with demand, and it takes years to bring new silver mines online. Physical investment is surging, which suggests that smart money is positioning for higher prices. The geopolitical and economic uncertainty that's driving people into safe haven assets isn't going away anytime soon. Central banks around the world have signaled they're pausing rate cuts, which initially sounds bearish for precious metals, but it also suggests that inflation remains a concern. And when inflation is sticky, hard assets like silver tend to perform well. The fact that silver is still 30% below its late January peak also means there's significant upside potential if the market regains its momentum. For long-term investors who can stomach volatility, the fundamental story for silver remains intact. But let's be honest about the bearish case too, because it's important. The recent 30% single-day crash exposed just how fragile this market can be. When you see that kind of volatility, it tells you that there's a lot of speculative money in silver, and speculative money leaves as quickly as it arrives. The fact that industrial demand is declining is a real concern. If manufacturers continue to find ways to use less silver, one of the major demand pillars for this metal gets weaker over time. Jewelry demand falling by 9% is another red flag. At some point, if silver gets too expensive, it prices itself out of multiple end-use markets, and that could cap the upside. The expectation that central banks are pausing rate cuts also means that the opportunity cost of holding non-yielding assets like silver increases. If you can get 4% or 5% in a savings account or money market fund, silver needs to appreciate by more than that just to keep up. And that's before accounting for storage costs if you're buying physical metal. There's also the psychological factor. When retail investors pile into an asset that's up 162% in a year, it often signals that we're closer to the top than the bottom. I'm not saying we're at the top, but the risk-reward dynamic definitely changes when an asset has already had such a massive run. If you're buying silver at $78 hoping it goes to $100, you're looking at a 28% gain. But if it falls back to $60, you're down 23%. The asymmetry isn't as favorable as it would have been a year ago when silver was under $30. So what's likely to happen next? Based on the data and market dynamics, here's my view. In the short term, the next 1 to 3 months, I think we're going to see continued volatility with a bias toward higher prices. The UBS forecast of silver touching $100 by March seems aggressive, but not impossible, given the momentum and the structural deficit. However, I would not be surprised to see sharp pullbacks along the way as the market continues to flush out weak hands and over-leveraged positions. The CME could raise margin requirements again if they think speculation is getting out of control, and that would trigger another wave of selling. In the medium term, looking out 6 to 12 months, I think silver is going to be range-bound between $70 and $90 per ounce, with the potential for brief spikes above or below that range depending on news flow and market sentiment. The fundamentals support higher prices, but the demand destruction at these levels and the volatility are going to make it difficult for silver to sustain a move significantly above $100 for any extended period. The UBS forecast of silver falling back to $85 by year-end seems reasonable to me. It acknowledges the bullish fundamentals while also recognizing the practical limits of how high prices can go before they start killing demand. Longer term, beyond 2026, the picture gets more interesting. If the supply deficit continues and mining companies can't ramp up production fast enough, we could see structurally higher silver prices for years to come. But if industrial demand continues to decline due to substitution and efficiency improvements, and if investment demand cools off as geopolitical tensions ease or other assets become more attractive, silver could give back a significant portion of its gains. The wild card is inflation. If we get a resurgence of high inflation globally, silver could absolutely blast through $100 and stay there. But if inflation moderates and we return to a more stable economic environment, silver might settle back into a more normal trading range. Here's my take on how to approach this market if you're considering investing. First, understand your time horizon. if you're a day trader or swing trader. Silver right now offers plenty of volatility to make money, but you need to be disciplined with your risk management because this market can turn on a dime. If you're a long-term investor who believes in the fundamental story, dollar cost averaging into silver makes a lot of sense. Rather than trying to time the perfect entry, buy small amounts regularly over the next several months. That way, you'll average out the volatility and build a position without the stress of trying to catch the exact bottom. If we get another sharp sell-off like we saw in January, that could present an excellent buying opportunity for those with cash on the sidelines. Second, think carefully about how you want to hold silver. Physical silver in the form of coins or bars gives you direct ownership, but it comes with storage costs and security concerns. Silver ETFs give you exposure without the hassle, but you're holding paper claims on silver rather than the metal itself. Silver mining stocks can offer leveraged exposure to silver prices, but they come with company-specific risks and often don't move in perfect correlation with the metal. Each approach has trade-offs, so choose the one that aligns with your goals and risk tolerance. Third, don't put all your eggs in one basket. Silver might be up 162% in a year, but that doesn't mean it can't fall 50% in the next year. Diversification is still important. If you're allocating to precious metals, consider splitting between gold and silver rather than going all in on one or the other. Gold tends to be less volatile and acts more purely as a monetary hedge, while silver has more industrial applications, but also more price volatility. Finally, stay informed and be prepared to adjust your strategy as new data comes in. The market is evolving rapidly, and what looks like a great opportunity today might look very different 6 months from now. Pay attention to industrial demand trends. Watch what the CME does with margin requirements, monitor geopolitical developments, and keep an eye on central bank policy. All of these factors will influence where silver goes next. So to wrap this up, is silver at $78 a buying opportunity or a bull trap? The honest answer is that it could be either, depending on your time frame and how you manage the position. The fundamental case for higher silver prices remains strong with that 6-year supply deficit and surging physical investment demand. But the recent volatility and the decline in industrial and jewelry demand suggest that the path higher is going to be choppy and unpredictable. For long-term investors with conviction and patience, I think silver still offers attractive potential, especially if you're dollar cost averaging and not trying to go all in at one price level. For traders, this market offers opportunity, but requires discipline and tight risk management. And for those who are nervous about the volatility or who feel like they've missed the move, it's perfectly fine to sit this one out and wait for more clarity. Thanks for watching, and I'd love to hear your thoughts in the comments. Are you buying silver at these levels, or do you think we're headed for another leg down? Let me know what you think. And if you found this analysis helpful, smash that like button and subscribe for more market updates. I'll see you in the next video.